Hey, everybody. All right. Everyone say a prayer, light a candle, do a dance, whatever you have to do to ask LinkedIn Live not to crash while we do this show. I had so much fun yesterday that immediately after we gave up on the show at about 10:45, I started drinking. So that's not true. That would be pretty damn funny because that would have been at 10 in the morning. I didn't do that, everybody. I was good. But hey, everybody, thanks for joining. As usual, let us know where you're from. Good to see folks have already dialed in. We got folks from New York that are here, San Francisco. So wherever you're at around the world, let us know, okay? As always, grab yourself a coffee. We will start here in just a minute. Anna, are you in? You are, Anna. You're in your baby's room, aren't you?
Yes, which is now converted into my office, the home gym, the storage room, everything. Anything but the baby's room, essentially.
That's pretty good. It comes across well on a little live thing. That's so cute. Good for you. That's all right. I've been doing this live from my daughter's bedroom now for, God, almost a month and a half. So who cares? Exactly, Veronica. No judgment. This is we're in a Corona world right now, so we'll just deal with it. Good to have David Garabino on, Veronica. As usual, folks, just let us know when you're in. All right, we're gonna dive in. Good morning, everybody. Welcome to the 25th episode of Fintech Insider, the Breakfast Show US. 25 episodes, man. That is amazing. I'm Sam Maul, 11FS Managing Director North America. I'll be your host for this morning's show. Sorry about the technical difficulties we experienced yesterday, but we're back again today. Do let us know where you're watching from. We'd love to hear where you are based. And also don't forget, from the show on Monday through Friday, we're running a contest giving 2 winners an exclusive Breakfast Show t-shirt. I'm actually wearing a 11FS t-shirt. I don't know if you can see that over my Corona belly. We love swag. If you're based in the UK and the US, all I need to do is put a question on the chat for us to answer. And at the end of the week, David and I will choose the best ones to get a free shirt. Winners will be announced during the stream on Monday next week, and terms and conditions are in this post. Today, we're happy to be joined by the one and only Anna Irrera. She's Fintech Correspondent and Financials Companies Team Leader at Reuters. On today's show, we're going to look at how the fintech financial industry are currently coping with COVID and the importance of media during a time of crisis. And actually, that's where I want to start. And if you're okay with that, I'm going to do a mini rant.
Sure.
Because it makes me feel good about myself. And by the way, hey, I love that we got somebody from Lagos, Nigeria on, a massive hotspot, by the way, everybody, for fintech. Calgary, Canada. Hey, Jay. I love Jay. And everywhere else. All right, so here we go, Anna. I'm going to go on my rant. Journalism as a whole. This is not a bad thing. Journalism as a whole, especially in the US, and I'll say the UK, and I'm sure it's other parts of the world, maybe Russia and others, where it was considered the fourth pillar of democracy is now getting attacked on all fronts. The term fake news, I don't know, it's considered a 4-letter word. I think it's the biggest lump of bullshit I've ever seen in my life. It drives me absolutely crazy, and I think journalism plays an incredibly important part, especially in a democracy or in a free society. Would you like to make any comment on that?
I can't really disagree with that. I think you can see in places where journalism can't be free, that it does have consequences on the way societies are run and the way people can live their lives. So I've been in awe of my colleagues who, I don't think you can necessarily qualify us as essential workers, but many of my colleagues, I'm working from my baby's room, but a lot of my colleagues are out there all day in conditions that aren't that they're a little bit more at risk than I am. And so, especially now when we're all locked in our homes, they're kind of our eyes into what's going on in the world. From the people sitting in the briefings with the president to the, people running around taking pictures in hospitals and, interviewing frontline workers. I think it's incredibly important, and so important to follow, to keep power accountable now when they're making decisions that are so important to the livelihood and actual health of people. So this is my self-congratulatory speech. specifically,
And
but my category, I guess.
no, I couldn't agree more. I mean, it's a bastion. It's called the fourth pillar. It's called the fourth estate, and many times, and believe it or not, that is considered a compliment, folks. That a free press is essential to a free society. And I'll give you an example of this. I'm in quarantine. I've been self-isolating with my wife for 2.5 months, which means I've run through all of the shows on Netflix that I wanted to watch. And so now I'm binge watching shows with my wife that she wanted to watch. So we're on season 3 of Outlander. Hey, don't judge me.
I watch it too.
Well, not only do we watch it, but my wife is very good at rewinding anything that involves Jamie, King of Men. For those of you that haven't watched Outlander, oh my God, just go Google it. It's actually a good show, but oh my God. But it actually deals a lot with Scotland and England back in the 1800s, and it does actually have a bunch of stuff around freedom of the press and what happens when you don't see it. So there you go. That's my mini rant. It was triggered by Outlander. What can I say? Don't judge me. Let's talk a little bit about though what we're seeing happen with the U.S. and I think this is important when we talk about the U.S. economy, and we talk about the UK economy too. One is Anna, talk a little bit about your role at Reuters. So let's set you up as a subject matter expert when it comes to financial services.
So I cover fintech, and I've been covering fintech since 2013. And I'm also, last year, was appointed team leader for financial companies, which means that I help the editors sort of oversee the file. So I work with colleagues that cover banks, insurance companies, asset managers, and all the gamut of financial companies here in the U.S. You can see my camera.
How long have you been doing this?
Now a blur. I've
I know.
I'm like a blob. I hope the audio's fine.
You're like a Monet painting right now on my screen. Monet or Monet?
Okay.
Whoever did the.
Now I'm better.
There you go. So we'll just go with it.
Impressionistic journalist. So so I've been covering fintech since 2013, and before I started covering, I've basically been covering finance I'm not there anymore. I've been covering finance most of my career, so a while. So I started covering after the Great Recession, which means I can't say I covered the last recession, but I guess I covered the effects.
And what I like. Oh, thank you, Bianca, for telling me it was Monet. Okay, of course Bianca would know that. Don't judge me, people. I like art, but I didn't study it that much. But Anna, you've also, what I love about you is you have a unique perspective, because, correct me if I'm wrong, if I remember this right.
Yeah.
And I'm doing this off the top of my head, so I could be wrong. Your background is Brazil, Italy.
So I'm Italian. So I was born and raised in Italy. Yeah, I studied in an American school, and which then became international, because I guess it was more politically correct to be international than just American.
Nice.
And then I came and studied in New York after university. I did my master's in New York, and then I worked in Brazil for a bit, and I spent lots of time growing up in Brazil. So I've been across continents, not so much Asia. I'm missing Asia, which is a big, and Africa, which are important, I guess.
Well, we'll work on it. I mean, we already got a good question, so when I ask, I want to get the questions, because normally I don't get to the questions because I run through mine and then I make this mad scramble at the end. So Sid Rahar has always asked great questions. He said, one, kudos to you as a journalist for what you do, because informed fact help all of us become wiser in decisions we make. Amen. So 2 questions. How has reporting changed in this pandemic? I mean, we're doing this from your daughter's nursery. And then 2, beyond the obvious rise of digital and cashless, what non-obvious trends do you see enduring post-pandemic? Good question.
So, I mean, the job for us who normally just do, business reporting is very different, because we don't meet people anymore. But, you can do a lot of our reporting on the phone, but meeting people is always better, because, you create more of a rapport with sources, and it's more human, right, than just meeting them on the phone. I've also, had to shift my coverage to basically everything that's non-COVID is kind of not very relevant right now. So that's what we write about all the time. I've been also writing about not necessarily fintech stuff these days, because the interest in broader themes and broader issues is impacting all business sectors. And then in terms of how I think what will happen after, it's very hard for me to answer questions about what I think, because my job is asking other people what they think and then writing what they say rather than me having opinions. I don't know.
I'm laughing. I'm laughing at that comment. Oh my God, I'm laughing at that. I have done so many FinTech Insiders with Anna. If there's anyone who has opinions, and valid, by the way, backed by fact, it is you. So let me just get that over with. Because in the other room, your Italian husband is dying laughing at you right now for this statement.
Yeah. Well, it's not opinions. It's I have statements based on fact, right? Like I don't know. I see a lot of people saying, oh, fintech is gonna, like, COVID is gonna accelerate the fintech revolution and blah, blah, blah. I guess there's evidence that in some areas, like in e-commerce and payments, it's accelerated like volumes, and perhaps firms that didn't have digital ways of accepting payments are having to now. But I also think that, when things go badly in the economy, like overall, there's less resources, and so I don't know if there'll be that much money to invest in things. And also, if people have less money to spend, then you can have more ways to pay. But if you don't have any money to give and you don't want to spend, then overall it might not be that great. But for sure, like now we've realized that we can do many things remotely, and so maybe people that weren't used to doing digital banking or having to deal with their financial lives digitally are doing so now.
Yeah, I think one of the trends I've been reading a lot about, I'm an avid consumer of the press, of journalism, across the piece. I mean, I spend and you're welcome. Reuters being among them, of course. But I try to get a broad spectrum and not just US, right? I mean, international is everything. Actually having a good broad overview of what's happening in the world. I think some of the things, the trends that I've seen flagged a lot, and Anna, I'd love your feedback on this because you actually live in New York. One is the idea of commercial real estate, right? So I'm going to pick on Citi because I do like Citi, but Citi has their massive tower over in Long Island City that you can see whenever you're driving in from the airport, whether it be from JFK or LaGuardia. There's massive commercial footprints all over Manhattan by huge banks. And the concept of having 7,000 people take 5 elevators up 50 floors every day is not that appealing. So I've heard a lot about how do we manage foot traffic, this concept of working from home. How do we throttle that as we turn the economy back on? And actually, do we need to, right? I mean, how does that actually take place? That's one I've read a lot about.
Yeah, I think firms and banks and big corporates are thinking about it now and trying to plan and trying to see ways that can get people back to work safely. I've also read a lot about, how some people are saying, some workers might never go back to the office anymore. I think with banks and regulated companies, there's a reason why it's better for them to be in the office because, their communications need to be monitored and it's just easier for compliance. I guess it does depend what you are doing at a bank. Maybe some staff doesn't really need to be in the office, but I don't know if it'll go back to the way it was. But I don't know for now we can say, oh, for sure that it won't. It definitely will.
Yeah, I think the reality is always somewhere in the middle with everything. I think it's always somewhere in the middle. George just joined us from Edinburgh. Hello, George. Glad to have you on.
Hi, George.
In season 3 of Outlander, it's in Edinburgh right now. I feel so bad that I just said that. But hey, there you go. I love Edinburgh. It's one of my favorite cities in the world. If you go down the Royal Mile in Edinburgh, halfway down to on the left-hand side as you're going away from the castle, there's a place called Barron Mall, M-A-U-L-E, Barron Mall's Cove. And I took a picture of it, and it basically goes in 10 feet, and then there's a trash dumpster there. Sums up my surname. But hey, George, that was just for you in Edinburgh. True story. Go figure. Right before we got on, we were talking a little bit about your baby and Disney and coming down to Florida, for example. I have to go there because an interesting story came out actually about Disney. New York Times reporting, following a decade of expansion and spectacular profit growth, Disney has been hit hard by the pandemic, which has cost it as much as $1.4 billion. 1.4 billion in lost profit last quarter. Earnings plunged by more than half as the theme park that welcomes 157 million annual visitors and has been padlocked. Its television and movie studios have been shuttered. The behemoth's ability to grow into a singularly enormous industry titan has left it uniquely imperiled, according to the New York Times. If I would have said that in December, people would have laughed at me that Disney is having a $1.4 billion loss in Q1. That pretty much sums up what COVID has done.
I mean, I didn't realize that so much of their revenue came from the parks. It's crazy. Like, you maybe would have thought, oh, they're launching Disney Plus and like they're going more digital and they have all these they've just made all these acquisitions. Bob Iger was leaving, and he was leaving in a high, and now. I think it's insane. I think it's not really about, when it started arriving, people couldn't grasp a sense of the impact it would have. It's more that people didn't think that it would come, because when we started seeing, like at work, we started seeing, following some banks were telling people not to travel, and that seemed like giant news. And then all of a sudden we started seeing like one firm saying one employee had gotten coronavirus and the other one, and then everyone, and then it just really hit, and the markets were collapsing, and just the magnitude of this started like coming home for us, and we just started thinking, oh wow, like if everything shuts down, then it's just like beyond, I think, what people could have really imagined, right? And I don't think anybody really forecasted.
I agree with you. I'm going to make a statement. I actually thought of this as I was brushing my teeth this morning. So, Anna, you can quote me on this. This is a very American take, but I think it actually is applicable to the UK. I used to live in the UK. I lived in York. Everybody, Skerpenbeck, tiny village just outside of Stamford Bridge in Yorkshire. I lived there for almost 5 years. So I do think this is applicable to the UK also. In the US, when you look at the impact of COVID, it has been primarily focused in very large urban centers. Where it started in Washington State on the West Coast, the hub of it quickly became New York City, New Jersey, Connecticut, Massachusetts, and then also an outbreak in New Orleans, Detroit, and Chicago. So these are all incredibly large urban centers, which makes sense because of the density, if you will. However, what we're seeing are cases now finally starting to drop in New York, but we're seeing a consistent rise in the number of cases, and the death rate in the U.S. is still around, is well over 2,000. I think it was 2,400 yesterday being reported. So here's my quote, Anna. We always talk about this in fintech and technology, that the future is already here. It's just not evenly distributed. I say that right? I believe I did. And I would say that's actually rather true both in the UK and in the US when it comes to COVID, meaning this has been centralized around large urban centers. And now we're starting to see a wave, if you will, work its way across the US. So I don't think we know what all the impacts are going to be. I really don't. It's been highly concentrated. It's been highly concentrated where you live in New York, for example. And impacted your life.
Yeah. And when it started, I'm Italian, right? So I was, me and other Italian expats, we were kind of self-quarantining and like preparing a bit earlier than other people in New York, I think, because we were seeing what had happened to Italy. And actually, my mom will be very happy to do her shout out. But like in February, she's a doctor. She was telling me, have you heard about this coronavirus? And like, what are your colleagues saying? Because she thought, like me being a journalist, like my colleagues who report on this would know more. And I was like, Mom, why are you like so like pessimistic? It's in China. How is it ever going to impact you in Italy? Right. And like 5 days later, all hell broke loose. So I was like shocked there because it started in like tiny towns outside Milan. So I thought, what's the connection to China there? And then it turns out that it was really already everywhere else. And, now we're seeing France say that they found a case of someone had it in December. So I think, again, we can't, maybe we should learn that we should stop trying to predict things because we don't really know what's going to happen, and stop worrying about things. Because, this is beyond what any anxious person like me could have ever worried about. Like it's reached another level of like unpredictability. So maybe stop worrying about things you can't control.
You know
is the lesson.
Yeah, I mean, I think this is really interesting from your background, and I can say this because you're sitting in a nursery right now. You have a child, right? Your first baby. Again, beautiful nursery, well designed, good job. But you've had a child born into a pandemic, right? And I think about I have daughters, right? I have two older daughters. If one of them was to get pregnant right now and to give birth through a pandemic, right? We're so focused on so many world problems that I think, and we can be so scared and everything else. I think it is that moment of taking a step back, right? I'm on a rant today, folks. I woke up in a mood. I can't help it. But to appreciate what we do have, right, and appreciate the impact we can have on other people's lives. Christoph, or Christopher, I'm probably sliding your name, from Manila, who is the head of digital partnerships and Fintech. Thanks, one, for joining. He just put something I really like, something I learned from one of the podcasts of 11 at Best. We do podcasts, by the way, everybody. Fintech Insider. You should subscribe. Is that it takes a generational change to adapt to big technology. This pandemic changed that narrative. But if and when we get back to near normal, do you think that adoption will also slow down? I'll give my opinion, Anna, and I'll ask yours, and I'll say this really quick. Again, predicting the future, I think, is tough. When it comes to digital adoption, we've seen a massive uptick within the current players. But I'll say this for the U.S., and I'm not sure what it's like in the U.K. The biggest players are doing great. Big banks have seen a massive uptick in accounts. I think they added $1 trillion in deposits overall in banks, and 45% of that went to the top 4 banks. Too big to fail? I don't know. Anna?
I don't know. I don't know. I think maybe the changes will be more lasting than we think on everything, at least that's what economists are saying also generally on how the economy will be going. Like, they don't predict that as soon as we open, everything will go back to normal. It might take years to go back to where we were. So maybe that's some changes will remain, But yeah, like, as you said, like, I've noticed, I mean, there's a very stark difference between how the big financial companies are managing this, or like it's impacting them compared to some of the fintechs, I guess. Even in banks have been able to say they're putting off layoffs. There's too many offs, but they're holding off on layoffs until the pandemic ends. Whereas some fintechs haven't been able to do that. They've laid off people, and so it's again, I'm going on a rant like you, but I don't know. Maybe it's just because they're more experienced and like been there longer, so they're more prepared to deal with things like this. And especially given how central they were in the previous crisis, now it's kind of not their fault. So they've been buffered, so they can withstand another crisis. So maybe I feel like in fintech we often like discount the big banks. We're like, big banks, they're like slow and all the rest. But I guess there's advantages to being like institutions that are hundreds of years old and have all these controls in place so that they can make sure that if something like this happens, they're still solid.
I'll be brutally honest here. I've had I do a virtual social hour, happy hour, every Wednesday night. If you're interested, ping me, DM me on LinkedIn or on Twitter. But I bring in about 6 people from across the industries, so a mix of folks from. We lost Anna, everybody, so I get to end my rant. Hopefully she'll be able to get back in for the last couple minutes. But everybody, I do this virtual happy hour with bankers and VCs and everything else every Wednesday night. And one of the comments I've gotten from everybody in the large banks, without exception, and this isn't just the top 4, say top 20, top 50, is that the throughput of projects they've been able to get while they're doing this work at home and distributed teams has been tremendous. They're actually incredibly impressed with how much work they're able to get done, which I think is not what people expected to hear, which gets back to this gets back to how do they do their models. And Anna, glad you could join us back. I'm sure the baby needed something, or your husband.
She needed to Zoom with her friends. Yeah.
That's important. Yeah.
The connection just dropped. I didn't realize until today how shit our connection is. It's really awful. Yeah, either my husband is in the other room just streaming Netflix all day and downloading things, or
right before I do this show, I'm constantly screaming at my kids, get off the Xbox and get off your damn phones. So I've been there. But I mean, the big banks, I think overall have really been churning out work, which I think is really incredible. George, it's interesting. George Kelsey is agreeing with a lot with what we're saying, and talking about what changes we think we'll see. Here's what I will say. Let's just stick with facts that we know, and we could talk about this. ADP private payrolls for April 2020 dropped by a record 20.2 million. That's the biggest loss ever reported. Biggest losses were in service and hospitality, along with trade, transportation, and utilities, as well as construction. Big businesses suffered the worst losses of more than 9 million jobs. We're going to have new unemployment numbers tomorrow that come out, which I still think are going to continue to rise. I don't think anybody would be shocked by that. And I think what I would add on to that is I actually read yesterday that I think it was Muchin saying that a couple of folks are starting to doubt there'll be a third round of PPP. I think that would be an absolute travesty, because I actually think the majority of folks that are being impacted are companies with less than 50 employees, folks that didn't need the minimum, that needed well under the minimum of $500,000 in a loan. I do think there needs to be a third round. I'm not somebody who loves debt, so don't get me wrong, but that makes me personally incredibly nervous, Anna, in all truth. I think the largest impact of COVID, small businesses are just going to get wiped out.
Yeah. And as you said, we were talking about before about how restaurants are reopening there, but only like 25% capacity. I don't know how that can add up. Like, we'll probably choose to stay closed because the costs of being open are not going to cover the revenue they can make on 25% of staff. And, I was reading before, like, I think yesterday the news came out that 1 in 5 New Yorkers could be out of a job by the end of June. That's insane. 1 in 5. I mean, I don't know how you can, like, that's what I was saying before, like, so much for like fintech revolution, everything's going digital. But if like 1 in 5 people doesn't have a job, like, they're not going to have money to spend to buy things on e-commerce platforms. Like, it's good enough to be able to buy food for the end of the month, and it just trickles down to everyone.
Yeah, I've said this. I said this, I think, last week in the show with Jen Tesher. I believe it was the Washington Post that reported on this, that from COVID is really hit the African American population and minority population. It's extremely hard. 1 in 10 African Americans in the poll they did know somebody that has died as a direct impact from COVID. 1 in 5 know someone that lost their job from this. So, it's interesting to see, and it's sad to see the impact it's having on people's lives that were already, and I'm talking generalizing here, but, when you look at, the typical credit score for minorities as compared to others, as, they're the number of CEOs that we see and executives that we see, it's really, it's even a sadder commentary on what's happening in the U.S. and it's challenging. And folks, I cannot believe this. We're already out of time. Here's what I will say to everybody who's watched this. This is a personal appeal from me. Support your, your local newspapers, your journalists, the media that's on your television. Those that, now I'm going to say this, and Anna, just take this in the right way. Real journalists, and not folks that are there for show. I don't care if you're left or right on your political views. Those that are who we used to lean on way back in the day, and we still need to lean on now. I really do believe in the concept of the fourth estate, that journalism is the pillar of a free society. Do your best to support them, get their stories out there. Anna is easily one of the best in the industry, in my opinion. That's me.
I'm smiling now.
Anna,
you can't see me anymore, but
she has got a very broad smile on her. Anna, where's the best place for the folks that have been
so we
watching?
can get better internet connection.
Amen. You know, yeah.
So, yeah. Well, you know, you can follow my stories on Reuters.com, and then you can follow me on Twitter, where I post stuff from me, but also other people, be it Reuters or other places that have journalism that's good, and not, as you say, just show, and it's balanced and fair and helpful and insightful.
All right, and folks, Sam All on Twitter. Reach out to us on podcast@11fs.com. If you have a guest or a topic you'd like us to cover. Tomorrow, I'm going to have Maya from Chime on. Drink coffee a half hour before the show, and you're going to need it just to keep up with Maya and the energy that she has. But Chime, fascinating story, right? One of these digital neo banks, if you will, in the U.S. has done extremely well. Everyone, thank you for coming on, folks from all over the globe. We really do appreciate it. Anna, can't wait to get to New York and see you. I have yet to meet the baby, so it's going to happen.
Yeah.
Everyone else, have a great day.
Bye.